Good morning. I'm Raymond Yurong. I'm a Hong Kong tax consultant. Now I'm gonna talk about accounting for tax purpose. In Hong Kong, every person runs a business. He must, file a tax return, and in the tax return, he must fill in amounts of them assessable profits and accounting profits. So, if you want to, report your profits correctly, you must have sufficient business records. Otherwise, you cannot substantiate how you compute these amounts of profits, and you cannot prove that the amounts of profit you filled in the tax return correct. They may, raise, estimate assessment, or it may adjust your profits. And in that case, that means your profits are incorrect. And in that case, you have filed an incorrect tax return. And in that case, you will be liable to penalty. The penalty will be quite large, huge amount of profits assessed. They may, estimate your profits, based on the assessor's judgment. Of course, the judgment may be on the high side, to give you pressure to to argue with them. You have to provide, details of the business. So, in Hong Kong tax law, if a person does not keep sufficient business records for his business, that matter is an offense, and the penalty for that offense is very serious, heavy. It can be the maximum penalty. Is $100,000 for a year of assessment. $100,000 for just 1 year of assessment. If they are, say, 6-year assessments, then you can see the amount of the penalty for not keeping a sufficient business record is very, very, very big. Too much for you. And the big problem is not just the penalty for not keeping a sufficient records. The big problem is the assessment. If you don't have sufficient business records, the assessor may use his own judgment, to estimate your profits. That may be a very big amount, And you see, if you can't produce evidence, you don't have, accounting records, how can you give, details of business? Then that means the assessor's judgment may be, become, final and conclusive, and that may be the final figure for you to pay. And when you have paid the estimate tax, that is not just the end. You will see, because the profits they estimate is different from the amount you state in your tax return. That means you filed an incorrect tax returns, and that means you can be penalized. You may be subject to a penalty for filing an incorrect tax return, and the penalty, under the law, may be 3 times the tax undercharge. Well, that is another big amount. That means if you don't keep sufficient business records, first, that is offense that can lead to a penalty of $100,000 for a year of assessment, and the assessor may estimate an profit, for you, and this estimated profit may be quite big. You may not be able to, because you don't have the records, you don't have the accounting ledgers, then you have difficulty to argue with him that the assessor's estimate profit is excessive, and then you pay the estimate tax. That is a big burden. And the third and serious problem, you have to pay penalty for the incorrect tax return, because the assessor made a estimated profit, and that has become final and conclusive. If you don't have records to argue with them, then your return profit low, because the estimated profit's high. That means you filed an incorrect tax return, and you must pay penalty, for such thing, for such, for the filing of an incorrect tax return. And the penalty can be 3 times the tax undercharged. Of course, in practice, the RD will reduce the penalty a bit, They have a penalty policy, a table on their website, and you can see it. But anyway, you see the consequence of not keeping sufficient business records. You see that is a very serious problem for you, and you may to pay a lot of money for IRD. So that's all for today. Bye.